Hi everyone, welcome to a brand new episode of Women of Community Banking podcast, renamed as WCB podcast as of today. So today I have a very interesting guest from the other side of the business. Now, what do I mean? She works for TruStage. She's a VC at TruStage. She's a managing director of the Discovery Fund for TruStage. That's Elizabeth. Elizabeth, how are you doing?
I'm doing well. Thank you so much for having me.
Absolute pleasure, Elizabeth. I mean, absolute pleasure. Out of your busy schedule, you've put like half an hour for us. We are really, really indebted for you spending your time and talking about the overall overarching ecosystem. Quick introduction about Elizabeth. Very interesting background. Started her career in UBS as an investment banker. Spent some time to understand that she needs to have a more purpose-driven role, and she went back to business school. Came out of it, did well, and finally transitioned to the ecosystem of VC. Right, essentially, uh, during the journey, she was really, really deep into helping underserved founders, bootstrap their startups and take it to the next level. Right, so she's been working. With all crazy people, I would say, right? So that's Elizabeth. A quick introduction for you. I'm sure I would have missed like 1,000 things. This was a 5,000 feet overview of your illustrious career. If you want to add something, please feel free to add anything I might have missed.
I mean, I think you covered the high points. I guess I would just say kind of my inspiration to transition into that sort of more values aligned career happened when I was in working in wealth management. I was managing my grandmother's small nest egg. She was a widow. This was supporting her in her retirement. And she had been a lifelong smoker who ended up getting lung cancer. And we, from a wealth management perspective, were investing in tobacco stocks for our clients because, the fundamentals were good and we saw kind of opportunities for these stocks to do well. But I was really kind of forced to reconcile my values and, who I was investing on behalf of with what I was investing in. And so that was really my light bulb moment that told me I have to figure out a way to put my energy and my time and my support into companies that I want to see succeed that are going to actually improve the world and benefit the people that are in my life.
I mean, that's what happens, Elizabeth, when the first part of our life is figuring out what you want to do and chasing money. That happens with everyone, right? And then figuring out that, do I actually want to do this?
Mhm.
Maybe not, right? And I mean, very similar to that, right? I mean, I was working out of Wall Street to finally decide this is what I want to do in life. Again, maybe not, right? That's the reason I bumped onto credit unions, and the last 3 years haven't gotten back, right? So absolutely, this is so relatable. First question, Elizabeth. Now you've got a very illustrious career, to be very honest, right? You've done multiple things: investment banking, wealth, VC. So what keeps you going?
So I have never been an entrepreneur. I'm not one of these people who's like, I started my first business at 17 and then three or four businesses later. I think a lot of people take that path to venture capital, but I really have a ton of respect and admiration for what entrepreneurs do. And I sort of am driven by their optimism, their enthusiasm, their passion. And so I love to be on the investor side of things and to support them and to help them make introductions. Like one of my sort of favorite things to do is to share my network with the people that I'm supporting. So, recognizing what my strengths and my weaknesses are, like I am not the person who's going to go be that CEO of the business, but I can do everything in my power to help them succeed. That's where I kind of get my energy and my sort of drive from.
That's much needed, right? We need connectors. We need connectors to be successful. I mean, I'm not an entrepreneur, but I think I'm the other material who loves to build something. But obviously, I mean, if I start something of my own, I mean, it'll be you who will be investing on it. Not sure now. So Elizabeth, next question, right? We spoke about your journey. Uh, would you want to maybe talk about your journey a bit? I mean, it's pretty interesting.
Yeah, I guess I'll start. It's funny, I've talked to a few young people in the past few weeks who are, in high school or in college. And I feel like there's so much pressure these days to kind of pick a career path so early. And I was fortunate, maybe it was the fact that this was happening 20 years ago, there just wasn't kind of that pressure and that awareness. I mean, I didn't know what I wanted to do going into college. I joined a few different clubs and I kind of learned about different industries through that. I had always been sort of analytical and mathematically oriented. And so through my Women in Business club in college, learned about investment banking. And it was presented as this, very rigorous, challenging environment, but that you learn a lot. And I thought that sounds, kind of right up my alley. So it's worth a try. And so I did it for a few years and I did learn a lot, but frankly, I looked at the people who were 10 years my senior and looked at kind of the lifestyle that they led and like their work-life balance. And I just said, I don't want that to be me. I don't want to spend my life kind of a slave to this job. And so that was sort of what pivoted me into wealth management, where I got the opportunity to work with clients and understand kind of what their goals were, and then do sort of both a top-down and a bottom-up analysis of sort of the economy and stocks and specific companies to figure out what would make the best investments for their portfolio. So that was really rewarding and kind of fulfilled my desire to learn and my curiosity. But like I said, I wanted to then integrate impact and kind of my values into my long-term career as I think about like, how do I want to spend the next 20 or 30 years at work. And so impact investing was really kind of what brought everything together for me. It tied in my skill set, my interest areas, but also sort of where I wanted to direct my passion. And so over time, the way I've done that impact investing and the shape that it has taken has changed a bit. But generally, investing in companies that have sort of impactful products. And then more recently, also really with an emphasis on entrepreneurs who are coming from underrepresented backgrounds, who I think deserve a shot and deserve some capital put behind them. And we want to be kind of that validation that these are people and ideas worth supporting.
Absolutely. I think, again, it's driven by impact is what moved you from point A to point B. And very similar. I mean, I was a software developer to start with, Elizabeth, 10 years back, but I couldn't feel the impact. That what am I driving to the top line and bottom line? And hence I moved to management consulting, where I felt this is more closer to driving impacts. I see what is happening. So it's so relatable. Your journey is so relatable that you spend the first couple of months, years doing what you want, and then you decide that, yes, this is not something which I want to do for the rest of my life, babe. Absolutely. So I think you almost answered this question, but still I want to, zoom in a bit, right? On what made you move from investment banking to wealth, to being a VC? I mean, you talked about, but if you can maybe share some more insights, it will be great for my audience to understand that it's not only you're not put to fit in a mold. You do not fit into the mold, go out and do something that you want to do.
Yeah. Yeah. And I would say for anybody who's kind of trying to map out their career path or who feels a little bit paralyzed by indecision or by fear, I certainly never knew that I would end up where I am today when I started my career, or even when I made my first job switch or my second job switch. So I don't think people shouldn't be intentional and shouldn't be thoughtful about when they make their moves, but I also think they don't need to put so much pressure on themselves when they're taking a new role to say, is this going to be my job for the next, 10, 15 years? Like, I think take a job in an industry or in a role that is really sort of speaking to you in that phase of your life and that's meaningful for you at that time. Like, investment banking was the right decision for me coming out of college because there was so much I had to learn about the business world and about kind of how things are done. I think that was a perfect training ground, even though it wasn't something I wanted to pursue long term. It was the right job for me at that right time. Similarly, in wealth management, I got to work for an amazing female portfolio manager who I think really kind of showed me that it was possible to be a successful woman in finance. She had kind of blazed a trail at a time when many women, weren't going to business school. She had gone to business school. She was managing a portfolio of over $1 billion of assets that she had, gone out and gotten these clients. So I think, again, even though wealth management wasn't my long-term plan, like there was a lot of learnings and a lot of opportunities I got from that experience. And so maybe I'll be a VC forever, maybe I won't, but this is where I feel kind of called to be working right now. I think I've, learned a lot in the last 10 years of being in venture capital. I think I still have a lot more to learn. And I think that's the great thing about this industry is that it is always evolving. Like, the sort of the metrics that we're looking for, and the types of companies that are succeeding as the pace of technology continues to accelerate and to change. It's going to impact how we do our jobs and what kind of companies we invest in. So it feels like even though I've been in this industry for quite some time, it still feels new and fresh to me, which is kind of keeps me motivated to do it every day.
That's the most important thing. I mean, feeling fresh at work every day. That's the most important. Time back to your passion to work with underrepresented or unrepresented founders, right? Because again, that ties back to your story, right? Of you finding your grandma and you were not comfortable investing in tobacco companies. And that's your personal thing.
Yeah.
So I think that brings a different side of you, apart from being an investor, that you want to do ethical investments, is what I may call it.
Yeah.
So how was your stint with underserved or unrepresented founders, and how did you help them? I mean, firstly, why and how?
So, anybody who looks at the industry statistics, in terms of the percentage of funding that goes to female founders, Black founders, Hispanic founders, it's been extremely low, like 1, 2, 3% over the last decade, and it just hasn't significantly moved. And I think as you think about where our country is going in terms of the demographic shifts that are happening, both in terms of like the priorities of younger consumers and then just who younger consumers are, we are living in an increasingly diverse society, whether people want to accept that or not. I want to accept that, and I want to kind of lean into that. And I think that there's so many, sort of the reframing of a problem is an opportunity, right? So there's so many problems that are faced by underserved consumers that can then be served through kind of new business models, new products, new solutions. And I think the founders who are the best positioned to build those companies and those products and solve those problems are founders who have experienced them firsthand and who have both the firsthand knowledge of like what it's like to live in that underserved environment, and then also the sort of most importantly, the passion and the dedication to solving it. Because I think being an early stage company and being an early stage founder is one of the hardest jobs there is. And you need to have so much kind of self-belief and dedication to that problem that you are going to knock down whatever walls you have to get this done. So to me, it is the right thing to do from a kind of equity and representation perspective, but it's also a really compelling investment thesis, because I think these founders are the ones who are going to be building the next, multi-billion-dollar companies, because these are areas that have been ignored by entrepreneurs, ignored by investors. And so that's where there's going to be the biggest market opportunities with the least competition.
Makes sense, right? A follow-up question to your current role at TruStage, right? So what do you want to talk about your current role? What do you do at TruStage?
Yeah, so TruStage, just for those who are not aware, is an insurance and financial services company, primarily serving middle market consumers in the US. And we have a long history and relationship with the credit union industry as well. So a lot of our products are distributed through credit unions or sold to credit unions. So our ventures arm kind of exists to think about two different strategies. One is, how can we support fintechs that are going to enable credit unions to kind of keep pace with the change of technology and, put them in the best position to sort of thrive in an increasingly digital and tech forward financial services ecosystem. And then the other piece is looking for fintechs that could be potential distribution partners or places for us to embed some of our TruStage insurance offerings. We have two different funds within TruStage Ventures, and I focus on our early stage fund. So the Discovery Fund is primarily investing in seed stage fintech companies that are, as we mentioned, led by underrepresented founders. And then our Ventures Fund is focusing more on Series A and later stage companies, but we have a nice continuum across those two funds. So, by going into the discovery fund, we hope that many of those companies we're going to kind of build that relationship with, help them grow to the point where when they are raising their Series A, they can get follow-on investment from our ventures fund. And we've had 3 of our discovery fund companies, as we say, graduate to our venture over the last couple of years.
Sounds good. I mean, in the interest of time, I'll ask you one parting question. This was really helpful, right? Now, you're an actual economist, right? You're not, you're not the other guests who I talk to. I mean, not my other guests don't understand, but we have fun. When I ask a CMO that, what is your outlook about 2025? You're like what? Wait, I mean, I do marketing. Wait, don't ask me difficult questions about economics.
Yeah.
But definitely I can ask you. And I mean, I'm a computer engineer and a mathematician, so I think it's very comfortable having discussion with you, right? So obviously the rates have gone down. Uh, Situations are improving, but still cost of funds is a huge problem, right? Still now.
Yep.
NIM is squeezing. So how does 2025 look like for you? What do you think 2025 will look like? I mean, not look like for you, but how will you think it will look like?
Yeah. I mean, I think calling me an economist is giving me way too much credit because I last studied economics almost 20 years ago.
Still.
But my guess is as good as the next person's for 2025, right? I mean, I think rates are coming down a little bit more slowly than people might have anticipated and hoped for, but they are kind of gradually coming down. So I think that will continue to be sort of a positive tailwind for the coming year. And I think financial institutions, for the most part, have sort of learned to live in a higher rate environment. So it's not anything new at this point. And I think what we're seeing from credit unions is a continued focus not only on member acquisition and how to bring in new deposits, but member retention and member experience and member engagement. So, there was kind of a huge emphasis on bringing in new deposits over the last year or two, but I think now people are sort of stable in the financial institutions that they're in. And it's like, how do we retain those people? How do we keep them satisfied? And again, as we're seeing these huge waves around AI, and a lot of sort of competition coming from that space, how can credit unions stay relevant in the face of this sort of technology onslaught and keep their members safe from, fraud and from scams? How do they make their lives easier when it comes to getting a loan, getting a savings account opened, like just making everything sort of as digitally seamless as possible? So I think that the adoption of technology is going to continue to be a big trend for 2025. And we're happy to be positioned where we are, trying to be kind of that matchmaker between fintechs and credit unions as they look to leverage each of their strengths to bring sort of a better experience to the end credit union member.
That's amazing, and this was a power-packed 20 minutes of recording. This episode is really amazing. Again, thank you, Elizabeth, for taking your time to chat with us today. Again, thank you again.
It was wonderful to be with you. Thank you so much.
Absolutely.